Hey there, Jedi traders. David here of TradingFibs.com to bring you the market outlook and recap for the first week of February, ending February 5th, 2016. As always, please seek financial advisory when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market. See what was going through my head on any given day this week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, after a full month sell-off in January, who knew what would happen this week? Trading the NQ this week and all its volatility was easily matched by the three other major indices as well throughout the week. First week of February, low volume Monday, and market action was already coming down off the rally from last week. Hey, end of the month, what else to expect on Friday? It was back into sell mode, closing out open gaps left the week prior. And Thursday's price action, no doubt the toughest of the week, with price action all over the place. Ending up being an inside day. The premise I had as I closed out the trading room on Thursday was that Friday was going to be a good day. Either way, and with the technical bias, that way we may go down. And sure enough, best day of the week on Friday. With all its volatility this week, I had the best week ever on the NQ, implementing a modification of how far I would let two contracts run before taking one off and using the 50-144 EMA to keep me in the trend. I also used a 10 or 13 using a Fibonacci number to the study to view pullbacks to see if the momentum was still in trend. The use of the fib projection and 96% projection levels have been a welcome to the room, as 4 out of 5 days this week, TF Russell 5 out of 5, those levels were hit. We'll show you those in a little bit. Another added dynamic to let all contracts run until all those levels. Crude futures moving sideways this last week, pushing off both extremes after fading off the 61.8% fib retracement. Has yet to find its way back upside to close out open gaps. Continued calls for price to come down as low as $7 by the Deutsche Bank. The end of January had price regaining some traction upside, but quickly fell back into the downward demise. The technical bias remains bearish on the crude on all time frames, as we will see here in just a moment. This, of course, goes without saying here. There were losses this week as well, but kept to a minimum. Even after a loss, maintaining composure and not revenge trading to wait for the next setup and knowing when to call it quits, like on Thursday's trading session. I'm not your typical trader that wants to get in and out every day. Patience and discipline for the setup on the momentum move that has the highest probability. Not 100%, just a good chance. Hey guys, you can go ahead and find that recap for the whole week, trading session focus here at TradingFibs.com. Go ahead and look at the posts where weekly results. Just click on the link here, and as you scroll down, a total of each day, you know, what got me into the trade on an intraday basis, what kept me out, and a personal blog all the way down. As scrolling through here, you can see all the way down till Friday, and then a wrap up for the week. So again, a great way to you should all keep a personal blog. You should all keep some type of writing every day of what happens for you in the market. But a great week on the NQ with 17 setups, best ever, 1,239 ticks. Again, using those two contracts on and letting it run until a given point. You can go ahead and view the blog site here at TradingFibs.com. All right, let's jump right into the volume profile. Overseeing the week, as we can see a lot of sideways action as we continue to somewhat on a bigger picture form this base down here. We still have levels downside on the VPOCs, 966.90 here on the TF Russell. 600-day period macro VPOC on the YM down here at 15,921 here. We could see on Wednesday, that's where we tapped that line and bounced up afterwards and kind of filled in that zone here, closing out the VPOC today around the 16,050. NQ with, oh my, so much room to move to the downside. Go here and talk to you about NQ today, as that was the focus of the week. But I want to go ahead and show you that we closed out some major lows here today and still have room to go down, especially on the points of control for at least the last 600 days. ES again doing its thing. As you can see, structure on the volume profile very similar to Wednesday's. a high, nice tail upside, value area high, but then extension above that, vertical rise, and barely anything. So we call this poor structure. Poor structure is simply like a bell curve. You have price action above value area, price action below, and then 70% of your trading. Again, I prefer the volume profile over market profile, as volume profile shows you one of the where majority of the price action held at a certain price and not a certain time. Let me go ahead and let's take a look at the crude here. Again, crude similar price action as it's been holding to the upside a little bit and then coming down, really waffling within the zone here. Again, Monday, Tuesday, Wednesday, getting some big range here on the EIA report, holding a little bit higher on Thursday and closing down here on the session on Friday. 600-day VPOC here on the NQ, as we could see. Price action again. Starting out the week at the up high here, Monday, Tuesday, Wednesday, Thursday, Friday, 600-day VPOC. We've kind of been shuffling around that number. You could see right here, 42.64. Several days, 1, 2, 3, 4, 5 days, finding some price action around there, but coming downside now. This was one of the key lines today. I thought this might have been it right here, down here around 40, I think it was 40.28 approximately. Closing out, let's get that, let me get that number there for you. Again, I posted on Twitter. Yeah, it was about 40.2850 as price action on the NQ, closing out that point of control from the January 20th. Very similar structure to the profile as seen on the other day. So, hey, if we're going to lead anywhere on Monday, possibly same structure to the upside would be nice again, but we'll take a look at the big picture and see if there's any probability of that going forward. All right, so there's our volume profile. Looking at the market profile, let's roll through each day. Here's our TF Russell again. We opened up the week up here around 10.25.3. Again, Monday over here, kicking it up a little higher, leaving an open gap. And then price action closing out these gaps down here, represented by the dashed lines. You can see we really did come down, represented by the bar over here. The high, and not the high, but the opening price, and price action coming all the way down here around 984.8. So that will leave us an open gap. As yet, the Russell still has a little bit of time here before the market closes here on Friday, but around here with an open gap leading into Monday's session. Taking a look at the YM opening up the week here at 16,275, getting a little bit of a push up yesterday on Thursday, and then price action coming downside here and finishing up around 16,129. So we go ahead and we move our open gap here to 16,129, leading into Monday open. Again, closing out gaps below, closing out gaps above, and not much price action that we have downside. It's all eventually going to be to the upside as we turn this thing around and go close out some major open gaps and levels up above. NQ, that was the index future of the week. Again, not great trading there on Thursday. As you can see, a lot of inside trading there. Just check out the profile here on Thursday. Very much an inside day. At some point, you just had to say, hey, I'm done. I'll give it up and I'll wait for a better day. And that happened today. As we can see, price action go ahead and move that as the NQ's already closed out here on Friday. 40.2250 is our new gap for next week, leading into Friday session. So you go ahead and just label that on your charts. There we go. And market action again. Weekly opening price 42.45, opening up here on Monday's session, and it was downwards from there. Market profile on the ES, again closing out down here around 18.75, so we go ahead and move our gap, place it as the market has already closed out for Friday. Weekly opening price up here at 19.25, taking care of open gaps up here at the beginning of the week on Monday, but unable to push any higher. Tuesday, Wednesday, lots of price action on Wednesday. And then Thursday, pretty much an inside day, kind of moving right back to that weekly opening price. And then it was all downwards trend on today's session. We'll go ahead and take a look at the Fibonacci levels there, that there were some key targets downside as well. Market profile on the crude, again, opening up at 32.24, getting a rise up this week to 33.72. So Monday, Tuesday, Wednesday, Thursday, Friday, really keeping to this zone here, not really getting back down into the 20s, but not absolutely pushing back upside. So we got open gaps up above. We took care of some open gaps down below, but again, when we have price action down here like we had on Tuesday, very much an inside day before EIA report, 29.69. Again, rumors that possible price action on the, production might be cut, didn't follow through. Again, what you want to notice is that when price action gaps down like you see right here, eventually the market comes back and takes care of it. Obviously, the next day I only had to wait another day for price action to pop back upside. All right, let's jump right into the big pictures. Here we can see the big picture for the week on the TF Russell as price action starting out the week. It was really all to the downside. A couple, that was that Thursday, Wednesday, a little bit pushed back up to the upside, pushing a little bit higher on Thursday, and then price actually breaking down here on Friday. We could see representation of the T3 moving average. Again, the top two charts here more in line with the Globex position as I enter each day. The intraday, I want to see where the overnight action was. Where is the technical bias? Obviously has nothing to do where the daily picture will be, but kind of getting a feeling of where was the overnight sentiment. And you lead into a session with everything in the red, that would be perhaps a higher probability that once a setup to the short occurred, we might lead in the same direction. Again, if I was looking for options trading or if I was looking for a swing trade, I would perhaps look at these two charts as well as the one in the bottom left-hand corner, in particular the 4-hour chart on a 51.44. Look at that resistance on the Russell at the 144. That was the first sign at the end of the week that we weren't, that was Friday's push up. We weren't going any higher on the Russell there. Price action came down a little bit choppy through the middle of the week and then could not break that 50-period moving average. Love that 4-hour chart. Love that 51.44. And there she was downside. We know the big picture. We know the big picture has been to the downside here, as we've seen price action on the weekly and the dailies all now holding downside. Taking a look at the Fibonacci levels, we could see price action never got back up to that 50% line. We're holding at these fib lines. Let's go ahead and open that up a little bit more. Again, Fibonacci pullbacks here with an extension combined. 161.8, typically a full move. We're kind of zoning around there. Again, it was a 38% retracement, former fib line, as price action just continued to move down and now back under the 8-period moving average on a simple moving average long term. All right, let's take a look at the YM. Again, YM, pretty wild swings on the YM. Look at this. Started out the week downside, pushed back up on Wednesday and Thursday, and then finally dropped it Friday. Again, you can do a fib retracement from the low of the week to high of the week, and it looks like almost almost about 50% there. Didn't draw a line, but just a visual there. Price action, I apologize. That's actually from last week, from January. So beginning of the week up here. Price action waffling within this zone, as we could see here on the daily picture. Again, you could see here on a 4-hour chart, downside, upside, and pretty much back down. So paying particular attention to the 4-hour chart, we could see the YM pretty much keeping to this gap, the 51.44, and that's kind of an indecision in the market. Doesn't know if it wants to hold above or below. Technically, again, all these charts are technical bias. Looking at fundamentals, obviously fundamentals are going to rule the day, but from a technical entry, we still have a bias to the downside, but still holding at some key lines, whether it's on a daily here, price action at a former fib line back 100. This is a line that draws all the way back to 2009. We're holding at 161.8, but really what we are is at a 23% retracement. If we hold up here and we continue to break back upside, then we might find some momentum. Watching the daily up here, you can see price action headed back towards that 50-period moving average. Again, we break above that. That could start the movement towards an uptrend. Again, just a 50-period moving average here. We got some room to go to get back to the upside. Here we have a YM on a daily picture. Again, sideways, but once again, I'm telling you how we have open gaps that get taken care of. Here we go from last week, taking care of that hole. October 2014 gap down here at 15,742, but really holding at a former, we have a Fibonacci retracement here. So again, why I'm holding volatility downside under the 5 SMA. Let's open up the fib line. Here we go. Price action again, founding at lows last week and holding here to about the 38% of Fibonacci retracement. Not going higher, not going any lower. So again, I try to look at pretty much the overnight picture up here in the upper two left. Going into the daily session, heading into next week, I could see the YM really needs to break above that 144 to get back upside. But right now, holding to the downside on Friday's session. Gives me an overall bearish bias to the YM. NQ, again, NQ is the market of the week. Lots of great ticks on the NQ, 17 setups to the downside. Here we are, Friday session, all back in the red. Daily picture downside, F5 SMA holding underneath. A daily, monthly in the red. Look at that. Similar picture we saw in the Russell. Couldn't get above that 144. Now couldn't break above the 50, which started to build a bias. As you can see here, my thinking throughout the week. Here I am midweek, price action not being able to get above that 50 period moving average. I enter into the day session. My Globex overnight is in the red, and then I look to the intraday and say, all right, the higher probability right now doesn't mean you can't take a setup in both directions. It just looks a lot it looks like a higher probability to the downside, and that's that key chart right there, that 5144 on a higher time frame on a 4-hour chart that looks so much better to the downside. Obviously, for the reason they can't get above that 50, puts you in the trade just like we had today. And so again, the key, the NQ has bearish written all over it. I showed you back on the volume profile on the NQ as price action here closed out that former VPOC, but it's the NQ that really has a lot of homework still downside to go. I got 34, 32, 75 downside out of all the indices. Again, NQ might lead the way here and eventually will form a return upside. But Fibonacci extension, check it out. Price action leading down towards fib target number 1, 39.50, 163. 40, 30, 75, right there. I thought that VPOC was the level, but all I had to do was draw back. All I had to do was draw back that candle right back there to September 28th. Look at that. We hit that 40, 30, 75. We drew down a little bit more, and price action just retraced just slightly, but not enough to break back to the upside. So again, pushing this whole move down, from the highs up here. And this is January, guys. This is 2016 right here. It's price action on a fib extension moving down towards its target here, 39.51. That is a 85% probability, not 100%, but 85% probability that we get down to this level. All right, long-term ES, as we can see, price action back in the red. Price action had been waffling throughout the week here between the 50 and 144. We know the big picture, finding some support here at the former fib lines, former lows, again, 1851.25, 1814.50, but again, breaking down below the 5 SMA, technical downside, and basically on the Globex position, it was all in the red going into today's session as we just could not break above that 144. Let's take a look at the bigger picture on a Fibonacci draw. Again, we got the lows down here. I just mentioned 1853, 1813. Again, look at that. This week, it was go back to Friday, Thursday, right there, Monday. It was Monday that we came right up to the 50, almost the 50% Fibonacci. Let's right there. That price level being around 1940.13. I don't think it hit it to the T, but left an open gap up here. And price action coming on Thursday. Again, Wednesday and Thursday, tough days. Wednesday, we got a little bit of a push up, but Friday, pushing back downside. Now we're at a 23, back to the 23% retracement from the swing size high to swing size low. All right, looking at the crude here, price action on the crude. Again, we mentioned in the market profile and the volume profile is just all over the place. heading into next week, we're already in a bearish stance all the way across. You could see it. We got open gaps above, open gaps below, and again, market takes care of itself. But in a Globex position over leading into Thursday, it was all upside, and then we came downside on Friday. And as you can see right here, which I didn't draw, but right there, rejection right at the 144. Got to give some respect here to that moving averages as price action rejected and came back down underneath the 50 as we lead into Sunday's open. Again, let's take a look at the big picture here on the Fibonacci using the simple moving averages. Again, would I love for crude to come back upside? Sure, long-term portfolios would love that. But right now we're on a Fibonacci retracement. As we could see, price action actually need to adjust this just slightly as we see price action. There we go. All right, from the high to the low, and price action retraced to the 61.8, left an open gap, and here we are on Tuesday's price action, left an open gap from Monday to Tuesday, but on Wednesday followed through, closed that open gap, so you can go ahead and erase that, and Friday's action just came right back to the downside. So leading into Sunday's open, let's go ahead and review the charts on what I post every day in the on the Twitter for everybody to get a brief synopsis. Again, market action overnight changes drastically. Pre-market can change in the flip of a dime there. So here we are with the pre-market leading into Sunday. We're pretty much bearish on the TF, on the NQ, and on the crude. We're below the 50 EMAs, or we're in the gaps right there. That's a 1-minute chart. Again, a 1-minute chart can change drastically. And then looking at a little bit of higher time frame, 20 ticks, 10 tick on the ES again, a little bit all over the place. Again, each day I post these, post them again on Sunday for everybody to be updated as we head into the market. But it's the Globex overnight, as we can see pretty much on the TF, bearish all the way down as we saw in the big picture. Again, YM bearish all the way down except for the shorter term, which is pre-market on a shorter time frame. Again, if you're looking for what I call short term, maybe more a swing position, long term it obviously is has written bearish all over this market where you haven't gotten back to a bullish stance yet. Slight change in the crude. Crude was almost showing some advances back to the upside. Let me show you the crude here. We found some push on a daily picture to the upside, but never followed through and came back down. So tech bias again for the Sunday open. Again, we're here at the ES with bearish all to the downside under the 50 EMA on the short terms. We want to get it back above those 50 EMAs to get back into a trend back to the upside. Again, crude showing all bearish to the downside. So looking to next week, future indices now fading back downside in tow with the equities or vice versa. As you see, who leads who is now back and basically a confirmed bearish trend, building value and point of control Friday's lows. With a bearish stance going into the Super Bowl Sunday's open, we'll take the overnight session to move us back upside on the Globex charts to regain some bullish positioning. Bullish momentum will continue once we break that 4-hour chart on that 51.44, which we gave up this last week. Once we break that 144 EMA upside, open gaps above will be the short-term targets for the open, or for the market, excuse me. For the long-term pick, markets clearly remain in a downtrend. Short-term pick is now in a bearish position on the 4-hour charts. We continue to close out previous days. Open gaps below with numerous open points of control on the NQ volume profile above the rest of the indices. Crude now is under the 50 EMA, which we just saw, which can easily turn on a dime with news that production will be cut. As stated last week, by no means does this indicate that the market may not pop back up as well. Your safest bet is usually to follow the momentum on any given day for the intraday setup. Longer term holdings for the upside need to wait for some confirmation on at least the 4-hour chart to regain some bullish technical bias above the 144 EMA as in the futures. Until then, you always need to be ready in both directions. Let me jump right in. I wanted to point out two things here before we wrap things up. One of the added features to the room when we talk about holding contracts now towards certain levels, a new study that's been placed in our room on a daily basis based on either the regular trading hours or the midnight open. These are the Fibonacci and the 96% projection levels. If you're following me, you've seen these posted on Twitter. These are in the trading room, obviously. These are the numbers that we get posted, configured daily. Don't need to do much except notice where they are. And so, for instance, here on the NQ where we opened up today, today's open up here slightly above 41.40. Target high was 41.90.25. Target low was 41.07.50. Again, look at how low we came. So how do we play this out every day? Well, long-term NQ. What do we know about the long-term NQ? We knew that the Globex position was already downside. We knew that pre-market already this morning was choppy. Didn't even want to almost take a trade yet based on yesterday's price action, but Globex positioning was downside already. I have rejection here at the 50. I know what the big picture is. I know the big picture, and so the move of the week came today on the NQ as well as the other three indices as well. But your Globex position was downside. Market opens, you get a projection level both upside and downside. 41.07.50 was the target downside. And so on the trading platform, again, I've gone to a little bit higher tick on the left-hand side here, but market opens up. You got a sell signal up here. This is pre-market. Again, this is a 20 tick, so the entry was somewhere within this vicinity on a smaller time frame, but it was the 50 and the 144 all the way down, which kept you in. Now, I mentioned day after day, it's not about always taking the whole pie. Sometimes it's just taking about a piece of the pie and getting part of the trade. And as you can see, price action just rolled down and rolled down and rolled down, hitting one level after another. Fib projection level, 96% projection level, the VPOC, finding the low from September 28th, 2015. What keeps you in the trend? Well, first of all, we could say the Heikin-Ashi bars. We could say the pullbacks are potential entries, but it's this 51.44. You can't compete. Not everybody in the market is using it, but it's there. 144 Fibonacci. As you can see, what did it do? It just remained in the trend all the way down, and that was the trade of the week. And as far as I'm concerned, the move of the week, as price action just rolled down. A rarity for a move like this, but when you have it, watch it every day. Watch that 51.44. Take that projection level. Think about the big picture. Know what the big picture is. Know what your Globex position, even though it doesn't determine what the whole session for the day was. But look at that 4-hour chart, and that can really keep you in the trend. All right, heading into next week, looking at the econ calendar, I think I'm going to point to Wednesday, knowing that EIA has really been moving this market, but there she is, Janet Yellen, speaking on Wednesday and Thursday, and you know what the market does. The market, when Janet speaks, everybody listens and moves the market. So that concludes an insight into the market outlook and recap. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter and at Trading Fibs. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Again, as we lead into next week, Jedi traders, please watch those charts. If the technical bias, again, gets above those 50 moving averages, back above the 144, we might see a turnaround. Otherwise, try to stay out of the chop. I know that's not always easy to say because we take our licks also to get some ticks. Have yourselves a Blue Zone weekend, Super Bowl Sunday. Good day, good night, and good trading to ya.